Ryan.
Thanks, Bob. I think for the time being, you have to, or Valerie, you have to stop sharing your screen in order for me to. Great. Excellent. Okay. Great. So you can hear me all right, Bob?
Yep.
Great. Well, thank you for having me on with you this morning. I wish I was speaking with you under better terms, but let me assure you that help is out there and help is on the way. So today, what we're going to go over is the Federal CARES Act that passed 2 Fridays ago, signed into law. So just to kind of give you an idea of the scale, the CARES Act is a $2 trillion package. It's just under 10% of our regular GDP in our country. The package is designed to be robust because the idea that this is a bridge that helps us avoid a prolonged recession and downturn and allows that once regular commerce can begin resuming, we can move back to normal commerce. In addition to the $2 trillion in face value of the package, some of the funds can be used by the Federal Reserve and can be leveraged to provide an additional $4 trillion in support for the economy. So we'll talk about the individual provisions, perhaps the most important, the automatic payments that the federal government is making to individual taxpayers. They are beginning the process of direct depositing these funds to taxpayers across the country. The amount is $1,200 per individual, $2,400 for joint returns, plus $500 per child. As it begins to phase out for incomes above $75,000 or individuals with $150,000 in joint income. We know that some haven't filed their 2019 tax returns yet. That's okay. The IRS will use your 2018 tax returns. If you did not include a direct deposit on your tax return, please go to the IRS website to see whether or not you've had your automatic payment deposited and some other information. So as we know, unfortunately, last week we saw a record of 6.6 unemployment claims filed after another record of 3.3 million. So as much as we support business, we're going to have a rise in unemployment almost irrespective. This includes some fairly robust expansions in unemployment benefits. Most importantly, some restrictions for the eligibility for unemployment. Remember, if you go through unemployment, you're applying for assistance, there are qualifications about how long you've been employed, how long you have to wait, etc. The eligibility requirements have been amended as it's related to the coronavirus. In addition, the federal government is providing an additional $600 on top of the regular state benefit through July 31st. States simply have to accept this additional benefit to further residents, much like Governor Wolf has done. A lot of questions have come up whether or not individuals will remain on unemployment, particularly given the advanced benefit. So it's important to remember that the eligibility ends when an individual can return to work. So if an employer is reopening, calling employees back, and that employee is available to work and they choose not to work, then their individual eligibility ends. So how do you access this? You still go through your state unemployment office. You don't go to the federal government, you go to your state unemployment office. So let's talk about the major provisions for employers. We've really broken them down into 3 groups, as you can see: the provisions that are available to all employers, the provisions available to larger employers, and then the small businesses, the self-employed, independent contractors, and nonprofits, which is where we'll spend the bulk of our time this morning. So let's start off with the provisions that are available to all employers. The first is a payroll tax provision for employers who payroll taxes. So think about it like this: everyone who's writing a check to their employees, after you write that check, you normally write another check to the federal government, covering the payroll taxes for both the employee and the employer side. Under the bill, an employer may choose to delay their payment of their portion of payroll taxes, which is 6.2% of Social Security wages. They can delay paying that between now and January 1st of 2021. If they choose to delay, they have to pay 50% of the accumulated amounts that they would have owed by December 31st, 2021, and the remainder 50% by December 31st, 2022. There's an important caveat here. This is generally available to all employers except if you had a loan forgiven under the Paycheck Protection Program. This is the small business program that I'll be discussing in a little bit. There are other tax changes that are important as well. Net operating losses, or NOLs. If you have a business who's operating loss and you want to be able to use that against prior taxes paid, now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back 5 years. This also applies to pass-throughs and sole proprietors. If you're a business, this is primarily for corporations that have AMT credits. You can accelerate the recovery of those as well. You also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly for restaurants and retail establishments who in the past couple of years have made investments in their property, they can accelerate the recovery of that as well. All these provisions are kind of really centered around one idea, and it's improving liquidity for employers. At the moment when employers have no revenue coming in, it's really hard to pay the bills. So these provisions give employers greater access to liquidity. It's not so much about reducing overall taxes as it is timing, giving employers more access to the cash they have today to be able to pay their employers. So there's another provision that's available to all employers. It's the Employee Retention Credit. This is a late addition to the bill. The early draft did not include this provision, so as a result, there hasn't been a lot of attention paid to it in the news. The retention credit generally applies to employers. We're talking about businesses, but also non-for-profits, for example, who are fully or partially shut down as a result of the coronavirus, or have a 50% drop in their gross receipts in a quarter, and they're eligible for this until their gross receipts get back up to 80% of their prior year's amount. Think about this. This is designed to help provide employers who have shut down or lost revenue, but who continue to pay their employees. So how much is the tax credit worth? It's 50% of the taxes paid by the employer up to $10,000 per employee, and that's a fully refundable tax credit. So a long way of just thinking about it, it's $5,000 tax credit available to the employer. There are special rules for employers with more than 100 employees and employers with less than 100 employees. If you have more than 100 employees, the benefit only applies to employees who you are paying but are not providing services. So a way to think about this is if your business is shut down, you've had a drop in revenue, your employee is not working, they're not teleworking, but you continue to pay them. You can access this credit as a benefit in the recognition of the fact that you paid them. Now, if you've had less than 100 employees, the requirement that they not be providing services does not apply. It's available to the employees you paid during the eligible period. The eligible period being when you're shut down or when you've had a quarter with this drop in gross receipts relative to the prior year. But importantly, again, the Paycheck Protection Program, that is that small business loan grant program that I will discuss. If you receive one of those loans because it can be converted into a grant, you cannot take advantage of this employee retention credit. We understand that employers have cash flow problems right now, and one of the things that employers who take advantage of this is that we're expecting Treasury to be providing guidance to allow employers to get in advance of this payment of the credit, which will help them pay their employees today. The Treasury Department this past Monday was supposed to start issuing guidance on this, but as a result of how robust this program is, they have been delayed in doing so. Right, so let's talk about mid-sized and larger employers, where this is kind of the most vague area. The bill in total includes $500 billion to the Treasury Department to support loans and loan guarantees and Federal Reserve credit facilities. The Federal Reserve credit facilities are these things that the Federal Reserve is creating, for example, to support commercial paper, money market funds, and they do these as a regular course of business when we have a financial crisis. Such was the case in 2008. So the 454 of that 500 billion is going directly to businesses at large. There are some programs for the airline industry and critical national security businesses that make up the remainder of that 454 to 500. The Federal Reserve is going to issue more guidance about these credit facilities and actually launch them, including terms and conditions. But again, they're a little behind on these guidances. Remember, this is not going to be a situation most likely where the company goes directly to the Treasury Department or Federal Reserve. Instead, what the Federal Reserve is doing is supporting financial institutions in the United States for them to make more loans available. There are some restrictions that go along with this in exchange for expecting the benefit that does include the buyback for stock companies so long as their loans are pending and for an additional year, and it limits the executive compensation. So this is where we're going to be spending the bulk of our time on small businesses, the self-employed, independent contractors, and nonprofits. The provision that's getting the most amount of attention is called the Paycheck Protection Program. It's a $349 billion program in loans for businesses. It's generally defined as less than 500 employees, the 501c3s, the self-employed, sole proprietors, and independent contractors. A way of thinking about this is if your business is generally qualified for an SBA program, you'll qualify under this program. And in addition to that, some employers, some businesses who would not qualify have been added to that list. That includes independent contractors and the self-employed. But it also includes restaurant and hotel folks who would otherwise be ineligible, because if you add up their locations, they have more than 500 employees. But under this bill, it says we're not going to judge you in the accommodation, we will judge you in the accommodation and food services business as a per location basis. So don't automatically assume that if you're not eligible for a regular SBA program, that you're not eligible for the Paycheck Protection Program, or PPP. So how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. There's a formula to calculate your average monthly payroll, and once that's calculated, you can multiply that by 2.5, except the loan cannot exceed $10 million. So where will you get the loan? A lot of folks are saying, do I go to the SBA, the Small Business Administration? We do not expect that folks will go to the SBA for these loans. Instead, you're likely to go to your local national lenders who are SBA 7 lenders. If they participate in the SBA 7A program, they're automatically qualified to provide these loans. In addition, on Monday, the Treasury Secretary designated all FDIC-backed banks and credit unions to be able to provide loans through this program. In part because this is such a generous loan that is backed 100% by the federal government. So you're likely to go to your local banks, those that you've already have a relationship with, call them to make sure that they're participating in the program, and they can help you apply along the way. So there's very minimal requirements in underwriting these loans. There are no collaterals required, no personal guarantee is required, and a really unique feature of these loans is that the loans can convert into grants based off what the borrower spends money on. So the way that the bill is laid out is it looks at 8 weeks of your expenses after the date of the origination of the loan. You tally everything up that you spent on payroll, that you spent on rent for businesses, interest on mortgages that are tied to business, and what you spent on utilities. And you can get dollar for dollar forgiveness up to that loan amount. So again, that's money spent on payroll, which should be 75% of what your using the loan for, money spent on mortgages tied to businesses, rent tied to businesses, and utilities. But of course, you cannot exceed the amount that you actually borrowed for forgiveness. There are some conditions. Your loan forgiveness is reduced proportionately if you reduce the number of full-time employees that you had relative to a benchmark period, either the year before or the first 2 months of this year. So again, when you get your loan, it's where you're at either at the date the year before or the first 2 months of this year. The loan forgiveness is also reduced if you reduce wages for employees making less than $100,000 by more than 25%. But that's a good note about wages above $100,000. In your calculation of payroll expenses, you can count the first $100,000 that you paid an employee, but nothing beyond that. This is really targeted at middle income earners. Employers can also avoid a reduction in forgiveness because we know that lots of employers had to lay people off. If they bring back their employees and restore their wages generally within 30 days and maintain those employees and maintain those wages through June 30th. So a way to think about this is what the government is incentivizing is that they want to give money to small businesses, money for them to keep paying their employees. So we're often getting asked, what if a business is shut down or you happen to be in an area where a governor has said an essential business can't open? That doesn't matter for this purpose. What this loan looks at is, were you paying your employees? Remember, the goal of lawmakers in creating this program was to provide assistance essentially in the form of grants to small businesses and encourage those small businesses to pay their employees. So you can learn more about this program at the URL that's below. It's a 4-step guide to help prepare you in applying for one of these loans. I'm proud to say that the SBA actually has been sharing this guide in their social media recently because it's very clear and thorough. It goes through in detail who's eligible, how you calculate your monthly average payroll cost, what your lender might be looking for when you apply for a loan, and in addition, how your forgiveness could be calculated. One of the things that we're doing at the U.S. Chamber is encouraging small businesses to really understand whether they're eligible for this program and think about what forgiveness might look like in your situation on the back end as you make a decision whether or not to apply for one of these loans or grants. All right, so there's another provision that's getting a good amount of attention that benefits small businesses and the self-employed, independent contractors and nonprofits, and that's the Small Business Administration Economic Injury Disaster Loans, also known as EIDL loans, EIDL. EIDL loans have been around for a long time. If you might have been affected by a tornado or another natural disaster, you might have applied for and received an EIDL loan. So who is eligible for these EIDL loans? It's small businesses and nonprofits, including faith-based. There are no restrictions here on the types of nonprofits. It's any entity that is a nonprofit that has fewer than 500 employees. And again, here, sole proprietors and independent contractors. But this is an actual loan. This is not a loan in general that converts into a grant. You can borrow up to $2 million in working capital that's repaid over 30 years. You can see the interest rates there. They're pretty low. If you take out this loan, payments are deferred up to a year, so you don't have to immediately start paying on this loan. They made it easier for businesses to apply. Your loan is going to be based on your credit scores. You don't have to immediately produce tax returns either. You can get up to $200,000 without personal guarantee, and there is no collateral required for $25,000 or less. There's a general security interest, sometimes secured with real estate, but they're trying to move away from real estate in this particular instance. This is an important feature that's brand new as a result of the CARES Act. If you are applying for an EIDL loan, you want to these injury disaster loans, you can request that you be provided an emergency grant, and that they have to provide it within 3 days up to $10,000. But what we're finding is very interesting is that 3 days actually is not the thing, just because they're being overloaded with the amount of requests. The bill details what you may use the grant for, but there is no requirement. The up to $10,000 grant does not even have to be repaid if you're denied the loan. So you apply for the loan, for example, you request the emergency grant, you receive it, but you're denied the loan. You still do not have to pay up to the $10,000 grant that you would receive. You should essentially think about this as an emergency grant for small businesses. There are some important interactions with the Paycheck Protection Program, the PPP, that we just talked about. Importantly, for example, if you end up with both, generally you would end up with both because you've already gotten an EIDL loan. Maybe now that the Paycheck Protection laws are being set up, for you those applying, you can roll those together, but you can't get double forgiveness for the $10,000 grants or up to $10,000. That would come off the Paycheck Protection Program's forgiveness. There's also some requirements with respect to the Paycheck Protection loans that you can't double dip. In other words, you can't take out the two loans to pay the same bills. If you're thinking about applying for both of these, you're going to want to think about those restrictions. So don't assume that you can pay or do all these programs and just stack them up. What they have done is make the Paycheck Protection Program most favorable, then tacked on other programs that they don't avail themselves to the Paycheck Protection loan, and that includes this EIDL loan, which runs through December 31st of this year. So you don't apply for this either by going to your local bank. You apply for this at the Small Business Administration's website at sba.gov. This is one where 501c6s can apply for. There has been a little bit of back and forth in the regulations regarding that. Chambers can also apply for the employee retention credit, but they have to be substantially shut down or reduction in revenue relative to the prior year period. So you want to think about that with your folks that do your taxes. So with respect to small businesses, there are some provisions that we've received a lot of questions about that don't come from the CARES Act. They come from the Families First Act, which was the prior bill sometimes called the Phase 2 bill. What the Phase 2 bill included was a requirement that employers with less than 500 employees provide paid sick leave, 10 days of paid sick leave to their employees if it's related to the coronavirus. Sick leave is taken when you're ill, when you're quarantined, or you need to take care of a family member who is quarantined, or if you're taking care of a child because of school or daycare closures. Leave is paid at the regular rate, but it's a maximum of $511 per day. Unless you're taking care of a family member, then it's 2/3 the regular rate with a maximum of $200 per day. Importantly, the federal government will reimburse the employer reimburse the employer 100% of these costs up to the daily maximum you pay your employee. This is a refundable tax credit, understanding that businesses are often having liquidity problems, as we alluded to. As well, the Treasury Department is taking steps to allow businesses to request in advance on the refundable credit so that you have the resources to pay employees that are taking the sick leave. This is in addition to what the employer already provides, including what you provide pursuant to state and or local law. So there's talk about businesses with fewer than 50 employees being exempt. Law does provide that an employer may be exempt, but they can only be exempt with respect to leave that's tied to caring for a child whose core daycare is closed, or only to the extent if providing the leave threatens the viability of the business. So if you think this applies to you, you should check out the Department of Labor's guidelines. They're posting on their website where they explain this further. Finally, the paid sick leave generally is not available for an employee where they can telework. That only applies to if the employee, for example, of a child, if they're taking care of their child, or they can also telework by staggering or changing their hours. Okay, kind of in the last part here, the bill also included paid family leave, or FMLA. Those that are not familiar with this, it's the Family Medical Leave Act, a part of the Phase 2 bill. It's a law that generally allows for 12 weeks of unpaid leave. What the Phase 2 bill did say that employers with less than 500 employees, they're required to provide up to 10 weeks of paid family leave if the employee needs to take care of a child due to school or child care closure caused by the coronavirus that we've seen. This is the only reason for extended leave. When you think about the interaction between this and sick leave, an employee probably would take 10 days of sick leave first and then would be eligible for up to 10 weeks of paid leave. Here, the leave is paid at 2/3 the regular rate again, $200 per day, $10,000 in the aggregate. Again, it's fully reimbursed in the same way by the federal government. There are some exceptions for employers with less than 50 employees, same as paid sick leave, and does not, again, here apply to an employee who can telework. Finally, where can you get more information about all of this? The uschamber.com has all of these resources, including bill summaries, and in particular, CO, which is a chamber program that focuses on small businesses, has several guides, tips, and other things available for small businesses. That's at uschamber.com/CO. And again, our PPP guide is at uschamber.com/SB loans. After this, I will be providing Bob and Valerie, who did a great job of getting this together, with these slides, and along with our other guides related to the employee retention credit, the EIDL loans, and PPP program. And with that, Bob, I'll turn it back to you.
Okay, Ryan, that was really complete coverage for what we were looking for. At this point, I want to encourage people to send in your questions. You just go to the bottom of your screen, the chat, type that in, and you can post some questions that I'll pose to Ryan. Ryan, let me start with a couple of items if I can. First of all, do you anticipate additional funds will be allocated to the PPP program should available funds be exceeded?
That's a really good question, and has been on the front line for a lot of small business, just because there's been such an influx of people applying for this. The answer is yes. Perhaps as early as today, the Senate has put out potentially voting for an additional $251 billion for the program, kind of being referred to as a Phase 3.5 bill. Definitely members of Congress have been talking about this, and we fully expect that should this program be, use all of its funds, that it'll be restored with additional funds, either today or in the coming days as well.
Okay. So staying on PPP, when does the 8-week tracking period start?
So the 8-week tracking period, for example, let's say, hypothetically, according to the Treasury Secretary, once the program kind of is relaxed a little bit, ideally you could go into your local bank that is participating in the program that morning and then be, offered the loan that evening. That the 8-week program or benchmark period would start once you are offered the loan.
On the issue of unemployment benefits, this additional $600 in unemployment benefits, does the person have to apply for additional benefits somewhere, or will it automatically start in their checks?
It automatically starts as it's being rolled out to the states by the federal government. But again, the key here for unemployment, if your employer, for example, takes this Paycheck Protection Program and is eligible to pay you, then you're no longer eligible for unemployment.
This one is a little specific, but if an individual is on SSI disability, how would they get their stimulus checks?
Could you repeat that? I'm sorry, I kind of got caught out there.
If a person is on SSI or disability, how would they get their stimulus checks?
Yeah, as you alluded to, that's a very specific question. Bob or Valerie, if you want to take that question down and then email it to me, I would be happy to do that. But as far as I know with regard to unemployment, again, that's through your state unemployment office.
Okay. A comment from one of our participants, they applied for the EIDL loan on 3/31, but haven't heard anything yet. Called and spoke to somebody yesterday who said they could be 2 to 3 weeks before the $10,000 advance is coming. Is that what you're hearing? Ryan?
I have not heard a specific timeline. What I would suggest is going to SBA.gov. You're able to create your own personal account where you're able to check to see what your application status is. 2 to 3 weeks is pretty broad range. I wouldn't think it's that grim, just because I've heard of a couple of businesses that have already received the grant as well.
Again, this one might be a little specific as well. I'm a full-time landlord, and I collect unemployment or PPP, or both.
Yeah, that I'm not for sure specific on that specific case for landlords. Happy to look it up for you this afternoon and try and get back to you with an answer.
I'm wondering if that applies as an independent contractor, but not sure.
Oh, you said independent contractor?
No, it's just simply landlord. I'm just wondering if that might work with the independent contractor clause. We'll try to get an answer for that.
Sure.
Related to the FMLA portion, do employees need to qualify for FMLA by traditional guidelines where they would need to be employed for a year, or is it applicable to all employees irrespective of the date of hire?
As long as the employee was employed by February 15th, this is where this one kicked in to action, then it would apply to them.
Are the requirements on small businesses to continue to pay their employees Family First, FMLA, are they the same requirements for larger businesses? In other words,
It applies for all businesses.
Is there a special application for self-employed independent contractors, or is it just the regular application? Or,
so all applications are the exact same, assuming that you're talking about either the PPP or EIDL. If you go to our 4-step guide, you can see where the application is, including where you would put in your EIN or Social Security number.
In this question, I was laid off from both a full-time job and a part-time job. If I apply for and accept a new part-time job with far less hours and pay, would it disqualify me from the additional $600 CARES Act fund?
I do not believe that it would, because if you went from full-time to part-time, you would be the additional $600 would not be prohibited from you.
Can we use PPP loan funds to pay a bonus to employees that remain on the premises?
I do not believe that would be the case. I do not think that would apply. It would only apply to strictly what their wages are.
Do you have any recommendations on if a nonprofit should apply for PPP funds or simply use funds they have in reserve?
not a financial expert, so I don't want to offer my opinion. However, what I've been hearing from businesses is that typically the best course of action is to go with the PPP just because it can be converted into grants so long as you use it under the 4 conditions. And then perhaps somewhere down the line, just because the PPP is available until June 30th. Now, those laws may change just by virtue of what is going on with the current situation, but the EIDL loan thereafter, you perhaps could apply for as well because it's available until December 31st.
There's a sort of a complicated question here, but let me ask you, Ryan, can you speak to the issue of seasonal employees under PPP and how they might be counted or accounted for?
Sure, that's a good question. So for seasonal employees, the maximum loan, excuse me, is 2.5 times the average total monthly payments for payroll costs for the 12-week period beginning February 15th, 2019 or March 1st, 2019, which is decided by the loan recipient and ending June 30th, 2019. For seasonal employers, the payments are deferred for 6 months. It's 0.5% fixed interest rate, and the loan is due in 2 years. Additionally, on our guide for the PPP, we dive into seasonal and non-seasonal employers and employees as well.
Will there be more funds for the EIDL $10,000 grant? I understand that these are given on a first come, first served basis.
I have not heard anything specifically about that. It seems that right now what the interest of Congress at the moment, or the taste for Congress, is to re-up for the PPP program, just because what we're looking for is to make sure that small businesses have money that are able to continue to pay their employees.
If you are using the PPP program and your origination of loans starts in late May, you still have 8 weeks or only the balance of time until June 30th?
So you would still have 8 weeks.
How is the amount?
You would have 8 weeks based on what specifically you're spending the money on.
How is the amount of the EIDL advance determined? Is it always 10,000 or dependent on other factors?
Well, specifically, it depends. It's other factors, but the biggest thing that we are noticing with regard to chambers, for example, is if the chamber has 1 employee, it's $1,000 per employee. However, there's different rules and regulations for each business.
General question regarding dealing with your banks on the PPP program. If a bank declines to accept your application, any suggestions on how they should proceed?
It's a good question. So what we're encouraging is different banks are understanding this program in different ways. We're encouraging for people to apply to different banks as well. So let's say, for example, you go to your local bank that you've been working with for a number of years, you apply for the program and you're denied. Check out other lenders as well that are participating in the program.
Okay, we are aware that the payroll needs to be reinstated for forgiveness. In a situation where employees are paid commission on a separate payroll, do we need to reinstate with the same type of payroll run? Or can we take advantage of the commission and include it in the salary?
So that's a really good question. So what's included in the payroll costs are all salary, wage, commission, and similar compensation. That would include payment of cash tip or the equivalent. But there's also, in addition, other things that are available that are included in payroll costs, payment for vacation or parental or family or medical or sick leave as well. the allowance for dismissal or separation, payment for the provisions of group health care benefits, including insurance premiums, payment of retirement benefits are included in payroll costs, and the payment of state and local tax assessed on the compensation of the employee. So it's a pretty robust payroll cost inclusion.
There is a question of whether the slides are going to be available afterwards for participants. We're going to be able to.
Absolutely. So I know that I might have been running through it pretty quickly, and I'm sure a number of you are taking notes. I will be providing to you, Bob, and Valerie, will help get this together. The slides, again, will be available along with our guides related to the employee retention credit, the payroll protection program, and the EIDL loans.
Back to PPP again. With the PPP loan forgiveness eligibility, what if the number of employees has decreased?
I'm sorry?
So with the Paycheck Protection Loan Program for forgiveness, what if the number of employees for the company has decreased? So in other words, I think they're suggesting if they are not able to bring everybody back.
So I don't know specifically how much it's reduced, but it's based off the time period from February 15th of 2019 or to June 30th. So it's the average number of employees, full-time employees from February 15th of 2019 to June 30th, 2019, or you average the number of full-time employees from January 1st of 2020 to January 29th. Or February 29th of 2020. And so that's where you get your average number of full-time employees and what your reduction based on, what your reduction would be on forgiveness.
I am a sole proprietor. Can I apply for the PPP and apply for unemployment as well as the EIDL program? What's the interaction, I guess, is the question there.
So it's my understanding, sole proprietors can apply for both the EIDL loans and PPP for the sum of payments for any compensation to income for a sole proprietor, that is their wage, commission, income, net earnings from self-employment. That compensation is no more than $100,000 for 1 year, and as well as a prorated basis. I do not believe if you're, and you can also apply for the EIDL loan, but I believe if you're admitted to one of the loans programs and you're being paid through that, you cannot apply for unemployment as well.
If an employee stays home because they think they were in contact with someone with the virus, we pay them through payroll plus they can also apply, they also apply for unemployment even though we have work available?
So if the employee has work available, let's say they can telework or they can take paid sick leave or family sick leave, they would not be eligible for unemployment.
For small business, self-employed, or independent contractors and nonprofits taking advantage of the PPP program, what might eliminate that business from not receiving forgiveness during the 8 weeks after loan origination? In other words, what are the risks to forgiveness?
So again, forgiveness, if you're spending money outside of paying, for example, yourself, whatever your wages would be, whatever mortgages, interest tied to, let's say you have a small shop or rent on a small shop or utilities, anything spent on that otherwise would then be taken out from your forgiveness.
Does PPP include part-time employees?
PPP does include part-time employees. It includes the 500 employee threshold for all employers. So that's full-time, part-time, or any other status. Independent contractors are not considered employees under this, and independent contractors are encouraged to apply themselves.
And what additions to the CARES Act do you anticipate will be addressed in what is anticipated to be phase 4 of the legislation? And let me be self-serving. Any sense of whether or not there will be an expansion in nonprofits beyond 501c3s?
It's a good question. So that is what we're on the forefront of doing. In every sort of conversation that we're having with members of Congress, it is encouraging 501c6s to be included. And so what that kind of entails is the issue that 501c6s are having is that they don't want to include them because they might be in the field of lobbying. So what we're encouraging is to include 501c6s that are these chambers and other trade associations, and then exclude from the payroll those that are actually federal registered lobbyists. We know that a lot of local chambers obviously do not have federal registered lobbyists, but there are trade associations that may have a couple. We're trying to exclude those individuals from payroll. But in addition to what the phase 4 bill might look for, is definitely money going to hospitals and other businesses that might have been missed in all this. So if you feel like your business is being denied application to these loans, keep bringing up to your local chambers, to your local elected officials, to your state members of Congress, why you've been denied and how you should be included. To note, Congress is tentatively scheduled to be back in 11 days, where we hope that they'll be working on a phase 4 bill. But there was a lot of talk of infrastructure that didn't really stick. It's more or less going to be figuring out what was missed in the phase 3 bill and then trying to get that included in phase 4.
Winding down here, we're running down in time, but another one here. If we have a reduction of employees during this period unrelated to COVID-19, is there a way to account for this that would limit the impact on forgiveness? Examples include retirement, normal layoffs, or terminations.
So it's only related to employees that have been affected, or is it related to COVID-19? If an employee was fired for, let's say, being late on the job or something, that would not apply.
And let me, again, I apologize to those who, we had so many questions, we can't really get to all of them. We'll try to pass them along to to Ryan and some others afterwards to see if we can get some answers for people. Ryan, I want to leave you with this one. Will the U.S. Chamber be putting together, let's say, best practices or guidelines on how to reopen businesses and bring your employees back to a facility once restrictions are lifted?
Yeah, so right now what we're kind of in is the implementation phase of the CARES Act. But once businesses are going to begin to be reopening, which will take a while, we've already discussed a number of ways what that will kind of look like. I mean, for example, everyone that goes to the White House every day has to go to the executive office building and be tested. We don't expect that every office will have that case to be able to test their employees to see if they're negative. But once businesses are allowed to be reopening, that will be the Chamber's biggest focus moving forward as to how these small businesses and other businesses can reopen and help them through that way.
So I want to thank Ryan Gleason for coming and joining us here today. Ryan, any final thoughts or comments on your part?
Just that help is out there, more help is on the way. I encourage folks to check out the guides that I'll be sending you, Bob, and then also the PowerPoint or the slide deck that I had. Any questions that you have, please feel free to reach out to Bob and you can get to me, and hopefully I can answer them the best of my ability.
So there were a number of questions about that again. Yes, this has been recorded. It'll be available on the Scranton Chamber website at www.scrantonchamber.com or at the websites of our chamber partners as well as the NEPA Alliance. There are other resources as well. If you go to our website, there are a number of questions related to different specific programs. We have a good deal of the SBA, U.S. Chamber, Pennsylvania Chamber, and other valuable resources are on our website. So I want to encourage you to check that out. And if you don't find the answers you want, please contact us or your local chamber. I promise we'll do everything we can to try to answer things for you. I do want to point out that we have a couple of more programs coming up with our chamber partners. On April 14th at 9 o'clock, 10 tips to maintain your health and wellness while working at home. And then likewise, and that'll be at 9 o'clock on the 14th, and later that day on the 2 o'clock, Valerie Serra, who is running the Lesson Alive program for us, will be doing a Zoom Meetings 101 lesson with What Lesson Alive. For those of you who are struggling to try to figure out how to use this technology, you can connect with Valerie through Lesson Alive. She's been incredibly helpful to us throughout this whole process. So again, I want to say thank you to Ryan and the U.S. Chamber for helping us understand the CARES Act a little bit better. And I want to encourage everybody to, again, log in for these future webinars, check out our websites, try to stay connected as best you can. Thank you all, and I hope you all have a happy and safe day.
Thanks for having me.